Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss perspectives on the second half of 2025. The first half of the year has tested investors with trade wars, market corrections, and geopolitical tensions. However, beneath these challenging headlines lies an important fact about investing, which is that uncertainty often creates the very opportunities that reward patient long-term investors. Over the next few minutes, we'll explore 5 insights that can help provide perspective in the coming months. Let's start by looking at how markets have performed as we begin the second half of the year. This chart shows the dramatic contrast between the first and second quarter performance, highlighting just how quickly markets can recover when conditions improve. From the market's perspective, recent trade agreements have taken the worst case scenarios off the table. The round trip for the major indices was one of the fastest in history, with the S&P 500 returning to its starting level by mid-May. The key takeaway for investors is that markets are forward-looking and capable of adapting to changing conditions faster than many expect. While there's never a guarantee of a quick recovery, focusing on underlying trends rather than daily headlines helps investors stay positioned for when conditions do improve. Next, the escalating Israel-Iran conflict, now involving the United States, has dominated headlines. The situation is still evolving, but history has some valuable lessons to teach us. This chart shows an important historical pattern. Markets have generally recovered from geopolitical shocks over time. Even significant events like wars and international crises have typically had limited long-term impacts on well-diversified portfolios. What's noteworthy is the muted response in the oil market. Despite concerns about potential disruptions to oil supplies, prices have only increased to where they were just a few months ago. This stability suggests markets are taking a balanced view of the situation. History shows that underlying market and economic trends matter more than the geopolitical events themselves. The Gulf War occurred during the 1990s tech boom, for instance, so markets actually performed well during that period. While the situation is still changing, it's important when considering your investments not to overreact to news headlines when it comes to geopolitics. The brightest spot in today's environment is the remarkable resilience of the U.S. economy. This chart shows that most inflation measures are well below 3%. Meanwhile, unemployment remains near historic lows at only 4.2%. While first quarter GDP did contract by only a fraction of a percent, the details show this was largely due to trade disruptions as companies stockpiled imported goods ahead of potential tariffs. Consumer spending, which is the largest component of the economy, still grew steadily. The economy's stability during a period of uncertainty is positive for corporate earnings and the overall stock market. Perhaps the biggest challenge for investors is that the U.S. stock market valuations have returned to historically expensive levels. Fortunately, this environment has created compelling opportunities in other areas of the market. This chart demonstrates how international stocks have performed well this year across developed and emerging markets. This pattern serves as an important reminder that market leadership rotates over time. Whether it's U.S. large-cap stocks or the Magnificent Seven, it's important not to have a narrow focus in our asset allocations. This final chart focuses on perhaps the most important principle for investment success: maintaining a long-term perspective. This chart illustrates how investment returns behave over different time horizons, showing that while annual returns can vary dramatically, they are smoothed out over time. This historical pattern explains why stocks and bonds have served as the foundation of long-term portfolios for generations of successful investors. This is something we should remember in the second half of the year. We hope you found this market outlook valuable. If you would like to discuss any of this in more detail, please don't hesitate to reach out. We look forward to speaking with you.